Hello, dear traders. My name is Clara, and these are the main trading ideas for the current trading session. First of all, let's discuss the situation with the American dollar against Canadian dollar. The pair is trading at 1.3730. The Bank of Canada will hold its meeting today. It is worth noting that Canada's GDP growth in the first quarter forced market participants to revise their forecasts for changes in the key interest rate. Thus, the national economy remains stable in the context of American tariffs on exports of metallurgy and automotive products. In addition, investors positively perceived the increase in the May Business Activity Index in the manufacturing sector from S&P Global from 45.3 points to 46.1 points. According to Reuters, traders estimate a 75% probability that the Canadian regulator will leave rates unchanged. Given this, the pair may continue to decline. Next, dollar against the franc. The pair is trading at 0.8240. Market participants continue to analyze macroeconomic statistics from Switzerland. According to data published yesterday, the inflation rate in Switzerland last month fell by 0.1% year-on-year, which was the lowest level in several years. Thus, the high exchange rate of the national currency, which has been worrying the regulator lately, continues to have a negative impact on consumer activity in the country. The realization of the risk of deflation will most likely convince the Swiss National Bank to continue easing the national monetary policy at its next meeting at the end of June. It is expected that the Swiss regulator will reduce the key interest rate to zero and thus create conditions for the weakening of the national currency. Given this, the pair retains growth potential. And finally, oil. WTI crude oil is trading at $63.40 per barrel. Despite the local recovery in prices, the fundamental background remains on the seller's side. Thus, the Caixin Industrial Activity Index in China fell last month from 50.4 points to 48.5 points, the lowest since September 2022. Weak statistics may be a sign of a slowdown in economic growth amid the negative impact of the trade conflict with the United States on the economy. Yesterday, the Organization for Economic Cooperation and Development lowered its forecast for China's GDP growth in 2025 to 4.7% compared to the previous estimate of 4.8%. In addition, the sellers are benefiting from increased production in OPEC+ countries. Given this, oil retains the potential for decline. So, these are the main trading ideas for now. Thank you for your attention, and don't forget to subscribe to our YouTube channel.